Happy Friday, Eric Bible with the Bible team at Neil Home Loans. Another Friday to rejoice. Where, yes, fundamentally interest rates have moved higher than where they were last week. They've pulled back from this week's highs. We need to understand why, but we also need to understand the silver lining in all of what's happening. So, first and foremost, as of this morning, 30-year fix is at 7.03%. Yes, that's higher than the 6.96 of last Friday, but keep in mind the 7.03 is lower than where they were on Wednesday. Wednesday, we saw rates almost touch 7.5%. And that really comes on the back of hotter than anticipated inflation data. CPI, Consumer Price Index, was released on Tuesday. And not only did we see a miss, not in our favor, higher than expected on the headline number from a month over month basis, we saw it on the core number. Markets took that, did not like it. We saw a significant sell-off, which ultimately drove interest rates higher. And it was sparked on the concern of, oh my gosh, inflation is coming back. Fed's not cutting anytime soon, which in turn drove mortgage rates up higher that week or that day. Well, fast forward to Wednesday, a voting member for the Federal Reserve, Goldsby from Chicago, made some comments that the market picked up on. And there he specifically said where, yes, higher inflation was not ideal, but one report is not going to change what the Fed plans to do. Additionally, he went on to say that rates are still incredibly restrictive. But more importantly, where yes, inflation is the key driver of what the Fed is looking and monitoring, it's not layered in CPI. It's layered in what's called the PCE report, personal consumption expenditures, which is expected to come out later or not expected, which will come out later this month. And the key attribute there is, unlike the inflationary reports with CPI, PCE looks at raw material costs. Unlike shelter, those components that have some element of call in, phone in, self-reporting, PCE is real-time data. And there we anticipate that number will be more favorable, which based on the movement, his comments, inflation, we do expect some pullback later this month, which is good news. The real driver this week, the contrarian component or data, was retail sales. As we know, the consumer has been incredibly resilient through everything. For once, this report is drawn in question, has the Fed rate hikes finally hit the consumer, and will we see sales pull back? Well, if this report is any leading indicator, I believe the answer is yes, and here's why. Markets were anticipating a 0.1% decline in retail sales. Instead, it was delivered with a 0.8% decline. Why that's so meaningful? As we've been reporting, as I've been sharing over the weeks, consumer debt is at all-time highs. All that debt, a majority of that debt, is placed on credit cards. Credit cards are impacted by the Fed funds rate. The consumer is finally starting to feel payments that are associated with that debt load. And there we saw actual sales decline for the first time since 2021. Is this a leading indicator? I truly believe so. At the end of the day, though, the Fed is the only one that is going to make that decision. But mark my words, the Fed is absolutely watching that, and the market knows it. And in turn, we saw a sharp pullback in rates compared to where they were Wednesday. That all said, the silver lining in all of this. I've seen countless headlines over the last few weeks that buyers are pulling back because interest rates are yet again soaring. This is the time for our buyers to act. I sound like a broken record, but I am very convicted in this thought. As interest rates come down, more buyers will come into the market. We have not seen inventory increase, and that means home prices will only accelerate as those buyers come online. So where, yes, interest rates are not as favorable as they were 2, 3, 4 weeks ago, home prices are. The buyers that have elected to wait, this is the time that we need to re-engage with them and show them the opportunity and taking advantage of reduced competition now. If you need help conveying this message to your clients, we're here and happy to support. As always, make it a fantastic Friday, and an even greater weekend. Thank you.